look at this. This is a question where they have given us an asset. The name of the asset is motor vehicle, and the cost of the asset is 48,000 when it was bought. Now, the other thing that we have got, that this asset, whenever these assets were bought, the total depreciation so far, may it be 1 year, 2 year, 3 year, whatever, the total depreciation for these assets are how much? For 16,000. I hope this is also clear.
Yes, sir.
Now, the next part is that on 30th September 2019, Nayat sold a motor vehicle for 13,250 and received a check in full settlement. So out of these 46,000, he sold one of the motor vehicle, and the cost of that vehicle when it was bought 16,400. It was sold now, and it was sold in 13,250. Is it clear or not? I'm trying
Yes,
to
sir.
explain the question first, then I'll go further. Now, the NIAT's policy is to depreciate motor vehicles at 25% per annum using the reducing balance method. And further, a full year's depreciation is charged in the year of purchase, but none in the year of sale. So look at that. This was bought when? 1st July 2018. This was bought, right? And this is the situation of 1st Jan 2019, right? This was
Yes,
bought
sir.
1st July. So we have got only 6 months when we have bought this asset. NIA's policy is to decrease motor vehicles at 25% using reducing balance method, but we have to apply a full year's depreciation in the year of purchase, not 6 months, because it was bought on 1st July 2018. He might have asked to apply 6 months, but he said that full year's depreciation will be charged in the year of purchase and none in the year of sale. And this was sold on 30th September 2019. So in year 19 it was sold, year 18 it was purchased. So we will apply a full year's depreciation for this. Now we have to see what is the balance of the provision account. It is 1st July 2019. And then we have got, what we have to write here is balance brought down. And what is the amount? 16,000 is the balance brought down. There are two things we have to do. We can see one side the value of asset is given, and on one side value of depreciation is given, right? Okay, value of the asset was 48,000 total, and value of the provision was 16,000, right? Now,
Yes, sir.
what has been sold out of this 48,000? 16,400 has been sold. What is the balance now? Can you tell me? This is the amount of the balance asset, right?
Yes, sir.
Okay. Now, for these assets, 48,000, what was the depreciation?
16,000.
For this asset, 16,400, what was the depreciation? This was the depreciation. We just calculated.
Yes, sir.
What we have to do is we need to remember that whatever has been sold, this asset was sold, this asset was sold. So this asset's value will be deducted from the total assets, and the remaining assets will be this much. In the same way, value of the depreciation was this much, and the value of the depreciation of the asset which was sold was this much. So we have to get the current value of the depreciation, which is this minus this. Okay, now while we have to apply the reducing balance method, we have to do one more procedure. This asset is the current value of the asset, and this is the current value of the depreciation. So we will deduct this from this. So what we are going to do is 31,600 minus 11,900. Can you tell me what is the amount?
19,700.
19,700. Now we will apply the new depreciation on this asset. What is the value? Times 25%. And what is the current value of the depreciation? 4,925. So what we have done, original value of the previous depreciation here minus the value of the depreciation of the asset which is sold here. Now we will add the new value of the depreciation, which is, how much is that? 4,925. And there we go. This is done. What is the total value of the depreciation? Depreciation this plus this. Now, and what is the value here? Will be same 20,925, but balance which will be carried down will be this, this minus this. This is the current value of the depreciation, and we'll bring it down here on 1st Jan 2020. Balance brought down is 16,825. So this is how we have to do this account, which was provision for depreciation. So this account will be exactly the same that we have to do. One more time, I'll try to tell you, whenever we have this kind of question, you need to see what is the value of the assets. You need to see what is the value of the depreciation. You need to see what is the value of the asset sold, and then you have to see the depreciation policy. So these four things you have to do. First things first, we have to find out what was the value of the assets, and we found that it was 48,000. Now we will deduct the value of the asset that have been sold, and we have been informed that value of the asset sold was 16,400. We will deduct that value and we will get the current value of the assets. After that, this was step number 1. Number 2 step is, what is the value of the depreciation? We see value of the depreciation given to us is 16,000. So this 16,000, now we have to find out the value of the depreciation which of the asset which was sold. And we find that the value of the depreciation of asset sold was 4,100. How did we calculate it? I'll do it one more time. 16,400 times 25%. This will give you 4,100. So this value will come over here. Simple thing, we'll get the current value of the depreciation, and in similar manner we'll calculate the current value of the assets. So this is the current value of the asset, or carrying value. I told you, carrying value. and this is the provision, updated provision. So what we have to do is carrying value minus provision. Carrying value minus provision. So carrying value is 31,600 minus provision 11,900. This is the current value of the asset or carrying value of the asset. Now, this carrying value, we will apply depreciation on this amount 25% and we'll get 4,925. Now, the working has been completed. We just have to put into this account. And what we are going to do is we'll place all the things at the right place and you are done. First thing first, balance brought down will come here and value of the depreciation of disposed asset. Then the new depreciation will come here and that's all. We'll balance it and it will be done.